Afternoon, it's Quant Trade Edge. I'm going to try to make this video a little louder. I hope it doesn't come across too loud. This is a 15-minute chart of crude oil, and I'm sorry, it's a 30-minute. This is a 15-minute chart of crude oil, and the significance of this orange box is that is the EIA bar yesterday, the 15-minute bar, the beginning of at which the inventory numbers were released. That's a significant piece of data in the oil market that happens every week, typically on a Wednesday. We got as low as down to here, and this red line indicates the low of the day yesterday. And then, pretty much after the pit close, this just sort of drifted up in a very corrective manner. Peaked here at 4:15, came down, and then peaked again around pit open at 8 o'clock. In 8:30, you got the stock market open. 7:30, we had news today, the jobs number. So all of this led to the tail here. But as you can see, there was ample supply from this price range where people were happy to sell again in the range of that bar when new information was received by the market. This led down to a new low, and you can roughly target the new low with a fib extension. This got to 68.80, so probably about 7 cents off of the 1.272 fib extension. But what's interesting here is it bounced pretty hard from there. If this was going to be weaker, you would expect it to continue lower, but it got an impulsive bar and has continued higher. If we switch over to a daily now, you'll see that this is a reasonable place to want to bounce from because it is the middle of this huge congestion zone from May to July or June. 2-month congestion zone right here. We got to the middle of that area. And this is our Taylor count. This day was a low in ROC with a PF3, meaning the LBR oscillators were both down, the slow and the fast, and the ROC. And today we got this little pop up, and this little pop up it's called a flip in the ROC, and a green candle. So this would set up a good Forex trade if we take out today's high tomorrow. And if you want to get in early, you could even see that on the 30-minute, where this initially was here, on the 30-minute, this is a 2B pattern where we've sort of taken out the previous low and closed below it, but then in short order, we took out the high of that bar. So, technically the 2B buy on the 30-minute would be buying this level, 69.42 against 68.77, which is, particularly, potentially a wide amount of risk. So you could also wait for the Forex trade to happen, which, would come from significantly higher level. But actually, I'm sorry, that's yesterday's high. Today's high would be here. So when we take out today's high tomorrow, look for a hoagie to be formed on that takeout, or look for an ABC down that can give you a smaller risk bar on a shorter time frame, like a 5-minute, to participate in tomorrow's gains. So that's my read on the crude market here. Of course, getting in early, you could capture more, but would it actually be more R's, more multiples of your risk, given how wide this is? Or is it better to just wait for that break, get a shorter bar to risk off of, and you've not only got more confirmation that things are starting to move in that direction, but you've also got the ability to size it up for the same amount of risk. So anyway, that's my read on crude right now. We are starting a Discord, and we do want to get your feedback to see if that's something you'd be interested in. Thanks again to Madge B. He is spearheading that effort. And we hope to see you guys there soon.